Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we're seeing is your classic. Yesterday was your classic buy the dip, and it pushed down to a floor that we had been looking at. Let me zoom out on this. We have been looking at 2075 quarter as a floor since last week, since this area here, since it tested, and then we moved higher. 82 quarter had been a floor that did not hold it yesterday. It needed to move down to test the weekly pivot in the 79.5 area, to test our proprietary lower level at 79. It overshot that into the 75 quarter. So it got ugly there for about 10 minutes. It was a hard low to catch, but if you were patient with it, you got a nice, 15 going on, 20 handle trade going. So we still have some long. It was 79. We added at a higher low, and our average now on that is 84 quarter. We also still have our swing long runner from down at 69. We were pretty close to cutting that yesterday. If it had made what we call a bias below the lower level yesterday, we would have gone ahead and cut that. But that's why we make our proprietary levels not only get tested, but they have to hold price. If they can't, then just by gravity says that it's going to head higher. Where do we go from here? The bulls have had a nice rally off of this low, but if they don't take out 2101 quarter today, you're going to see more selling come in. This remains a very two-sided market, and it remains a market that on the daily chart still wants to consolidate. We keep gravitating back to the middle band. We were off for a couple of days. We just came back within a couple handles. We're back off. It's buy the dip mode because one of our baseline rules is if you want to trade between the middle band and the upper band, that's buy the dip mode. If the future wants to trade between middle band and lower band, that's sell rallies mode. Whatever contract, whatever instrument you're talking about. And I would say that's pretty much true for equities as well. It's a very general rule that we use, and it has served us very well during this entire uptrend. It keeps you out of that tendency to want to be early, to want to be short, to want to short things in the hole when things start to pull back. You have to keep that perspective. So for today, the bulls want to make that higher high. You've seen a lot of higher lows, higher low, but they all follow higher highs. So 2101 quarter needs to go today. Doesn't mean it has to blast through, take out upper band, do something outlandish. It just needs to make that higher high to kind of keep that bull train slowly chugging back up towards the 2106, 2107 resistance area, and ultimately the high up at 1775. The bears want to create another lower high now versus 2101 quarter. You got 2107, 17. You've got a lot of lower highs here. You got a lot of lower highs and a lot of potential weakness. And the bands are still compressing. The bands are going to get tighter because you're going to lose these prices here that were distance from middle band, and eventually you'll lose these prices. And as long as we keep interacting with middle band, these bands are going to tighten up, and then we're going to get some level of band expansion, whether that's up or down, as we head into late April, early May. So what I've been telling our folks is, look, you can be long, but when it works out in your favor, take some profits, a lot of profits, and leave a runner. If you're short, like we had folks that were short from up around 2100, we got down around middle band yesterday. We were testing those areas. You got to, take some profits, leave a runner. If you don't, if you stay greedy, then instead of being up 30, you're going to be up 5, like they would be right now, short 2100. So keep that in mind. This is not a greedy market. This is not a market that you can just get long and forget about it. Those days are over. Two-sided market. Bulls are going to have their time. Bears are going to have their time. It's your job as a trader to take your profits and look for the next opportunity. Leave a runner in case it runs further, but understand that you need to be looking for the next opportunity. All right, that's all I've got. Everybody have a fantastic day. Follow us on Twitter at Princetontrader. Check out the website, princetontrader.com. Come check out the chat room. Come trade this stuff with us. Live screen share, audio, chat room, and a lot of great folks. I'll be back tomorrow morning with another webcast. Trade them well, everybody.